Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the kind of double top, kind of bearish top that Bitcoin and Ethereum have putting in on their charts. And of course, the outlook for the macro market, as today is Macro Monday. But before we get into that, let's just appreciate the green on the board. Look at what a great job Rose is doing. Crazy ICP, that Filecoin just continuing to make me regret not getting that perfect entry that works just absolutely 100% hit rate with my style of trading. And so I'm so disappointed that I missed Filecoin, even if others are popping off to different degrees or similar degrees. That setup for me was the one that got away. So many of you may be feeling this way, especially as we look forward to a possible reversal this week. Of course, what goes up must come down, and so today we are going to get just some 3-year, New York Fed inflation expectations, and depending how this does, it could cause a little bit of waves in the market, but also, just in general, we have been pumping a fair bit on the charts, including in stocks. And so this is how the week closed last week. And you can just see all the green on the board. Well, of course, again, like what goes up must come down. So let's just see how that holds this week. One thing to consider is that we aren't done with all these quarter two earnings reports and all of that. So, although a vast amount of the tech sector and communication, etc., financial have reported, you do see a fair amount of the listings with August dates, etc., to be reporting, at least on the current calendar that I have here. So just continue to watch those earnings reports. Of course, if they are super negative, they could suppress the market just a little bit, but the big guys are primarily out of the way, and the Fed has made their decision for summer on their interest rates. And so really anything that we're looking at is probably going to be calculated in September or around that time, right? Maybe end of Q3, or in Q4, or perhaps even the first quarter of 2023, when we could potentially see this entire market confirm a bottom. Now, confirming a bottom doesn't mean that we haven't reached a bottom, and it also doesn't mean that we have reached the bottom. It just means that, if people think that we've bottomed out, then we should see a confirmation according to the data that we get later in the year or early next year, especially as that recession data starts pouring in. So, up until this point, we've basically just been suppressing the overinflated markets. Okay, we had this insane run up, not just on crypto, but also on stocks, and it was all fueled by that unlimited Fed spending, by that unlimited money printing, by unlimited loans that transnational corporate, just billionaires, like basically extended to each other at 0% interest, which dramatically and almost infinitely, increased the availability of dollars in the market, so the monetary supply. And because of that monetary supply issue, of course, dollars became worth less the more loans that all these different corporations lent to themselves, right? Because each loan is worth whatever the dollar value is. And so they are effectively printing dollars. And you combine that with other things like just the government overspending in general without a balance of taxation, which would cause inflation, including things like stimulus checks, etc. And then also you consider the supply chain shutdowns, which, oh my gosh, China has shut down an entire city. Once again, the latest news from China, they are shutting down an entire metropolitan area, which is just going to just crush supply chains for whatever was manufactured there, whatever was being made there. And the world is suffering because China keeps having this zero COVID policy, which is absolutely nuts. They are not going to get down to zero. If they have even one case, they go full dictatorship, and it's just insane. Of course, they are probably practicing for the days that they have mass riots, and you can tell that there is a real authoritarian bent going on here. And while I agree that the West, you know, dabbled in experimenting with that just to see how it would go and to test the limits of it. I think reasonable people prevailed, of course, in this this rights-based liberal democratic system that we have, which of course just means freedom and the ability to vote. We the people, right? So I'm not talking about political parties. I'm talking about liberal democracies, which is something that we should all love as opposed to these authoritarian dictatorships. And we want to pressure our governments to do better. But the key point here is that China is not being better. China is not going to be better. We can smack our politicians around and they respond to us, but in China, they just smack down. Okay, there's no way to hold these guys really accountable. And so, we see some very scary signs coming out of China, and they just threatened to shoot down the plane carrying the Speaker of the House of the United States, which would be a very terrible precedent. It would be an act of war. And so the fact that they even allowed their propaganda wing to suggest that they would do that was a threat of war by China against the United States. And so I'm telling you guys, just, you know, concentrate on building 9 to 12 months of savings. If you can, let that be your motivation for trading, okay? Because we don't know where this world is going, and things in Europe and with Russia are not any better, okay? This world is getting a little bit turbulent, a little bit scary. And this is Macro Monday, so I have to talk about these things because we're going to be talking about where is the bottom of these charts. And when you look at the charts, what do we have going on here? Well, let's just zoom in a little bit on the daily here. Of course, we do have these kind of little reversal tops, being put in on the Bitcoin chart. And so, of course, it's very likely that we're coming back down to test whatever type of pattern that we are going to end up putting in. This is obviously three black crows, or perhaps we should call them three racially and gender neutral crows these days. But anyway, it's a nice reversal pattern. And of course, we had some type of, I think that's a shooting star there, and a couple, other reversal patterns here. So you do see that we are getting pretty hard resistance, and this has effectively formed a double top because on the higher time frames, we haven't really got a confirmation of a higher high here. So essentially, we have a double top with a bearish formation. And I want to go beyond that because a lot of people are pointing those type of things out. But one thing that we should also take a look at, of course, is that we do have these divergences here, and this is really important. We do have a hidden bearish divergence building up from this area over here in June all the way to our price action now in August, basically, right? And so we have like a 1 month, hidden bearish divergence. I don't think I need to tell you guys that that might not be a good thing, okay? To have a 1 month hidden bearish divergence. Not sure if that shows up on the monthly. I doubt it. Probably it's going to be something like on the 3 day or the 2 day, something like that. But we also have a this one from a couple weeks ago. So basically a week, 2 weeks, actual bearish divergence building up here, which should be perhaps on the 2-day by now. But the point here that you really want to be sensitive about is that we do have heavy bearish divergences being built up on the chart. And so what are these green lines that I have down here? Well, these green lines suggest, where we might be able to just, in my optimistic yet also accordingly bearish view, would suggest that if we put in a lower low, that we could perhaps build up a bullish divergence. Whether it's a very low drop or whether it's just kind of almost break even, but just a little bit lower than our kind of low, macro low here, then we would still be forming bullish divergence, and that could signal the bottom of the market. Okay, guys? So be on the lookout for this. If we do drop, don't be necessarily terrified by this because it may be signaling, right? If we take out like 17,500, it could be signaling a bullish divergence. And that's something that we should look forward to if we want to find the bottom of the market. So, personally, I don't think that our macro low has been put in. I've talked about this many times. I am of the view that probably we're going to explore this trend line down here, which would be approximately 8,000. If we just want to take a little bit lower, it could be 7,500. A little bit higher, it could be 8,500. And that would be very similar to where Binance's Scamwick last October or whatever it was dropped straight down, and it came down to $8,200. I made a video about it, so you can look to see if my Binance Scamwick video, and that one to me suggests this market is highly manipulated by very key players. I think if we do end up dropping to this level, that would put a lot of guilt on CZ, right, the CEO of Binance. I think it would put a lot of guilt on his shoulders for how much damage was done in this market. If his wick goes basically down to the precise price target I'm thinking about, this could be extremely scandalous. And guys, I mean, it's on the charts. It's documented in TradingView. We can all see that wick. So either we don't go there and that was just some type of technical glitch at Binance, or Binance knew the exact bottom of the market more than half a year in advance. And I don't think I need to mention what the implications of that would be. Guys, why would I even be thinking about this area? Well, first of all, something that probably no one else has pointed out to you, but which I was mentioning to my friends, Crypto Retta and Yent Lee, and a couple other guys in their lovely group, the AR Collective, a paid group. You can join my group. It's linked in the description of the video. That's for free. But AR Collective is a beautiful paid group, and of course, we talk about these type of things. And we have a CME gap here, okay, on the professional exchanges. Obviously, not on the 24/7 exchanges, but that's why I've marked it out here so that you can see it. And so that's why I have my divergence bar pointed all the way down here, because perhaps this area, somewhere between, CZ's Binance Scamwick and somewhere between the professional exchanges CME gaps in the chart, which tend to get filled over time, which traders tend to target, right? Maybe that area would be of high interest, not only because maybe there's some scandal or something like that, market manipulation, market makers, blah, 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 but also maybe just as a self-fulfilling prophecy. Maybe that's kind of like a multiple objective area, and price could come down there. Now, why could I also suggest that? Well, hey, guess what? We have a bear flag formation that could be putting in if we don't take out, this higher range on Bitcoin. We are going to have a bear flag again being put in on our chart, and the measured move for this bear flag. Oh my goodness, look at that. The measured move for that bear flag would be somewhere, if it's early on, like if we just drop there now, that would be my actual target of the bottom of the market, using this orange line, which is just my hypothesis, and then also the possibility that it could be that CME gap if we just, fall a little bit later, maybe we chop around for a month or something, explore the bottom of this range, fill out that flag a bit, and then break down, then maybe the measured move takes us to fill that CME gap. And gosh, guys, that's one, two, three, four, if you consider the scam wick on Binance, four confluences for this key spot to target. Oh, and hey, before I forget, don't forget about this gigantic bear flag, right? Now, some people are saying that that one has already played out and that it only went to about 22K or whatnot. Um, but I'm not really sure what they're seeing. I'm seeing this measured move, and that measured move takes me right there to the CME gap. So what would that be, guys? I'm thinking about 9,000, 800 to approximately 8,000. Let's just call it 8,000 to 10,000. Okay, let's just call it that. 8,000 to 10,000. We have one, two, three, four, and then of course Binance's Scamwick, five confluences for that area to be a possible target and a very interesting area to look at. Now, why would I also have this one right here? Well, if we consider that the market tends to front run us and doesn't always give us what we like, then perhaps if we go to, let's say, the weekly, right, and put on our EMAs, then what you could see is that the 300 MA, the 300 moving average, does come about in this area. And I don't know if if Bitcoin is traded like a tech meme stock these days, then what we could consider is that maybe it's traded like the stock market, and so the 300 MA tends to be pretty interesting to traders as a potential bottom of the market. And so maybe Bitcoin is pretty close to its bottom, and maybe that bottom is going to give us that lower low, that bullish divergence, right? If it can hit somewhere around 17,000, not 17,500, but maybe 17,000, right? And that would be somewhere in this area. I could pretty much even bring this one up if I wanted to, like somewhere like here, because the key point is as long as it's below this wick, we've pretty much got a bullish divergence as long as we don't, bring the RSI too far down with us. Then the RSI could make a higher low while the chart makes a lower low, and that could give us that bullish divergence. Okay, let's see. We covered the CME gap. We covered the bear flags. Let's see. We've also got this little area right here, right, for this one. So, guys, this is basically what I would be targeting there. And yeah, so that's my bearish divergence target. And again, it corresponds to that 300 MA. Let's see, what else do I have in terms of macro Monday? Let's go ahead and just turn on our structure here for the chart. Let's go ahead and just remove these EMAs. And what you can see is that we are basically conforming to this macro downtrend. The little bit of a pump that we got did come off of this line right here. And so if we did continue this line basically down here, and let's say that we retraced the breakout, then if I went ahead and let's see, let's put back on this area, then we could easily see that this area right here would correspond to the breakout retest. Do you see that? Do you see how we have this diagonal, right? Which is basically what gave us that pop to the upside, that pop that everybody's been enjoying, right? That bullish boom. And then if we could come back down and just retest it, where would we retest it at? Right there at my minimum threshold for a bullish divergence. And so, hey guys, like we could literally be at the bottom of the market right now within like hundreds of dollars, right? I mean, underneath 17,500. And, that could be the bottom. And it could literally be as easy as just doing a bullish retest of the breakout that we've just had, and that would keep us above this diagonal. It could perhaps give us that bullish divergence to break this longer downtrend, right? To break this longer downtrend, and then maybe Bitcoin will go into a pattern of accumulation rather than this capitulation pattern, right? And so that's what I'm looking for. That's what's interesting to me, right? And of course, we do have this kind of swoosh going on here, this curve, of course, and I don't know why some guys just like feel like they need to always like poo-poo everything as soon as they hear it. This isn't meant to be like some type of firm structural support or something like that, okay? This is meant to be a psychological threshold so that you can consider when to sell things, and it's no different than making a trend line. This trend line has no more importance, right? This trend line has no more importance than that curve does. And if you think it does, you're probably mentally challenged, okay? Stop just criticizing things that you haven't thought about. What is a straight line on a log chart, right? If we zoom out and we think about like this is what the real price action looks like. And so if I draw a line from here or a line, directly up it, right? That's a straight line on the real price action, right? Linearly. Now, if we switch to a log chart, why does it look so much different, right? Why is it so much different? Why is this whole chart so different? And if you go back to the beginning of time, right? You could just draw a straight line like something like this, right? Like you could just draw this kind of straight line all the way through here. And it's just, so amazing how everything lines up. Now tell me, is that a straight line? Is that a straight line, guys? Like here, let's test your IQ. Is that a straight line? No, because we're on the log chart, right? This is what it really is, right? This is what it really is. And yet it touched all these points along the way, right? It touched this point, it touched this point, touched this point, touched this point, touched this point, touched this point. Now let's turn the logarithmic scale off. Oh, hey, it doesn't touch any of those points. So how would you recreate that those touches, right? You would recreate those touches by using a curve, only it would have to be, exponentially oriented, right? You would have to align it in some exponential way. And now this exponential growth curve is that straight line that you saw on the on the log chart. And so guys who tell you, really stupid things, and I don't know why they feel the need to make like those type of commentaries when they don't understand like why people are using tools, right? They don't even bother to think about it. They just criticize it immediately because it's just something that they don't regularly do. Well, yeah, of course, we have a growth curve here, right? We have a growth curve here, and this is some type of a growth curve. It's just not, straight up the logarithmic system. It's just its own type of growth curve. And if we can hold this area, right, on that growth curve, then we actually are, going to still retain our our bullish structure. And by the way, like if you move this even slightly, that touch no longer applies, right? If you move it this way, that touch no longer applies, right? If you pull this down, these things just stop, working, right? The ends get all messed up. And so of course, if you want to have touch, 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 of course, this is just kind of a scary moment. And on the CME, this doesn't even exist. Then, of course, we have to align it in a very specific way. It's not like you can highly manipulate it. You can, of course, wiggle it a little bit, but guys, come on, right? You don't think people are wiggling their like trend lines, like trying to find like which wick it aligns with best? Like, give me a break, okay? Like, the critics in this industry are they're so out there sometimes. And I'm telling you, look, this is a good tool. You should feel comfortable using it. Don't let people scare you out of using tools like this because it can be helpful. And again, I showed you that on the dollar, and the dollar, of course, is also important for Macro Monday, because look what's happening. We're starting to break down out of that kind of growth curve that we have on the dollar, right? And while it, of course, needs to break down from this kind of jury-rigged kind of straight line as well, right? Which, by the way, we would have to adjust like every time we had a new 2 points, because this is obviously a curve, right? So curves deserve curved lines. They don't necessarily have to be using these straight lines. That would be ridiculous, right? And so, of course, like using these curved lines makes sense. And if something is following a curved growth path, then if it starts to break down from there, that should be an interesting sign to us, even if we're using these horizontals in order to consider where it might go. And so I'm still obviously considering 103, right? And so it doesn't matter if it breaks the yellow line or the white line. It's just the white line gave me a little bit more of a heads up that this growth path may be altering. Now, maybe I just have it wrong. And see, this is where that kind of like fidgety artistry comes in with, right? But at some point, you start breaking the other points, and then it just no longer makes sense. And so you have a very limited range that you can work with before it just gets, so funky, right, that it doesn't make sense anymore. And I want to show you another example that was pretty much, the perfect example of this, right? So basically, this one up here, where you can see how, even though, of course, you can fidget with these things, you can obviously fidget with them, nothing is going to be perfect in any of this stuff, right? There is no such thing as perfect. We did get, this approximate growth curve, right? This approximate growth curve. And then what happened? It broke down. It actually retested on the upside there, until it finally broke down again. And that could have just given us a little advance indication that maybe this was going to break down. Now, look, with 1, 2, 3 touches on that curve, that's a pretty good, indication. Now, how could I have drawn this in any other way, right? I mean, and, and still include the point where it started to go parabolic. Where could I have drawn that? Like this? Like this? I could have drawn it like that, right? Well, this would have been chopping all the way around here, right? And so maybe both tools are equally useful under different circumstances. And my point here is that Bitcoin deserves this type of curve here when we can see on the Bitcoin CME chart that we do, of course, have all these just lovely touches, right? Lovely touches on these curved, on these growth curves right here, and they conform every single time. Every single time they have conformed, and where you broke down from the growth curve is where you actually ended up breaking down on your price action. So guys, don't dismiss this stuff just because you don't understand it or you don't use it. I know that stuff's a little bit weird, but so was the 5-day, like Gaussian channels, and that worked out perfectly, right? So was my method to determine that we were going to get under 20K in price action when other guys were saying that they don't see us going below 25K, at all, if that. And so, these methods do work. They may not be what's typically found, out there in the different channels of crypto YouTube, but I'm just trying to be the best trader for myself, and I'm just making tactics for me. If any of you guys can benefit from that, please do. But sometimes I get criticism thrown back my way, and I just don't understand what's the point of that. Because maybe if there were tips like how to use a tool better, like I'd really love that. But just to say it doesn't work when it very obviously has been extremely successful multiple iterations in a row. I mean, don't tell me that it doesn't work if that's what's working for me well over 50% of the time whenever I use it, right? And so where does this breakdown exist on the Bitcoin chart here? Well, of course, it would be if we're breaking down from this area right here, approximately 23,000 to 22,000, let's say 700, this type of kind of end of the wedge here, which moving forward would basically give us a little bit of an insight as to why we probably don't want to explore the bottom of this channel. Because if we are just using straight lines, right, if we're just using straight lines, then you might think that it's pretty fine if we just go like this, right? Like that's going to be perfectly okay. Like why couldn't we just bounce from there? Well, there's a reason why we can't bounce from there, and it actually is intimately related to our parabolic growth curve. And this isn't necessarily parabolic. It's just a growth curve, right? So, the reason why, of course, is that we do have some critical support in this area, and that critical support happens to align with our EMAs, which if we're on the daily here, lo and behold, that does correspond to our 10 MA and our 10 are basically our 9 EMA over here. And losing those could put us into a squeeze play to the downside. Now, you do see that temporarily we did lose it, but we still are holding our daily 10. So that is actually quite bullish. That's what we want to do. We want to maintain above that 23,000. And like my friend and my mentor in EMAs, Crypto Retta, says is that, if you're above the 10 on the daily, that is incredibly bullish. You don't want to close a candle on the daily under the 10. And so, yeah, we can wick around this area, but as long as we close above the daily 10, then we should be in pretty good shape. So right now we are in pretty good shape. But if we close a daily candle under 23,000, I'm telling you guys, like my friend Crypto Retta, he is a very smart man, and if that candle closes under the 10 EMA, it's not going to be good. In almost every case, you find the candles squeeze to the downside. They test their lower EMAs, which could even come down to this 21,000. You see this 50 over here, this 50 MA, peeking its head out here. And actually, I believe that's the 50 EMA, if I'm not mistaken. Nope, that's the 50 MA. Okay, so yeah, we could even go as far as the 50 MA, and that would really be pressing our luck because we're already going to have been breaking our structure. Now, what do I mean by structure? Well, if we go ahead and just take off some of this junk over here, let's see. Do I need that? Well, that's just going to show us our target there. You can see that if we close under this $23,000 area, we're basically going to lose our Stokes. If we close under 23,000 even, we're going to be losing our 2-day Stokes, which is really important because, as I mentioned, we're building up that 2-day that multiple day bearish divergence, right? I showed you guys those bearish divergences, right? And so if we're going to, basically try to have any chance of continuing this structure as a higher high, or basically as our kind of higher time frame high, then we need to keep this, we need to keep pushing above. I may have misworded that, but basically, if we switch over to like the weekly, or let's get one of these lower time frames. Yeah, let's look at the 5-day. All right. So if we look at the 5-day, you can see something pretty obvious here, right? So first of all, you can see that basically we have a low, and then we have basically a lower high forming, right? So we have some higher highs up, way up here, right? We've got higher highs and then lower lows on our way down. And so basically we have a lower low, and this could end up being a lower high. Now, what we wanted to have, right? What we wanted to have in order to have like a bull market comeback, right? Or at least the chance of that, is we wanted to put in a higher high, right? That's why all these guys are really lusting after like 35 or 30,000, right? Like they want to get into this area, like they don't want to stop, because on the higher time frames, like we could make a basically, a higher high, right? And then if we come back down, maybe we use this area as support, and then we have a higher low, not just on the lower time frames like the day or the 4-hour, but also on the higher time frames like the 5-day and the weekly and those type of things. And by creating that macro structure on those higher time frames, especially like the weekly, it's so important, right? At how we measure the macro on the weekly, especially with our EMAs, that turning around here is just not good, because it's just another lower high, and that would suggest another lower low, right? So this is the core of your macro Monday, okay? This is what we're talking about today. We're talking about what could happen on the macro for Bitcoin, and why that's so important in determining, a bullish bottom of the market or a not so bullish bottom, or a, what are we looking at, right? A higher time frame, lower time frame, like what are we, what what is the possibility here? And so then when we go back to these lower time frames, like the daily and below, then you can see exactly why, right? You can see exactly why that structure matters, and why this curve also is so important. If we break down from this area, then most likely we're going to be losing our daily RSI cross, our 2-day Stokes, our daily Stokes, our daily MACD, our daily RSI. Already forgot, we can already forget this 12 hour MACD, right? And so basically we're going to drop down. And if we drop down, then by the time we get here, testing our lows again, we've basically, we're highly likely to be breaking structure, and we could also be in severe danger of crossing our MACD on the daily to the downside, giving us just more momentum to the downside, as we've just lost all of our upside momentum as we've broken out of this kind of um, diagonal channel, and as well as we've broken out of our teardrop, and we've also we'd be violating this potential um, descending wedge here, which could potentially break to the upside, which we're sort of getting a bounce, but it's not like we're breaking out of this wedge or anything, right? So this thing could still be playing out. We could still explore the zone, and that's why I believe this area right here, breaking out of the teardrop, right, and then dropping down to this support, is actually very bearish. And so on those higher time frames, you're going to end up putting in, basically a low here, right? You're just going to be putting in a low here, and because you've lost all your momentum and you would be in danger of losing this momentum, it could be a significant drop down. That's basically what we're looking at. And again, for the long time, for the big view, maybe dropping down isn't the worst thing in the world, because it could give us that bullish divergence, right? That we would need to perhaps, break out of our macro downtrend. But all of these things are working together, and so it's just a matter of, did you want to go to 18, to 28,000 this week, right? Did you want to go to 28,000 this month? Then we need to preserve this area. Like we just absolutely need to preserve this area. Okay. And then we're going to maintain our momentum to the upside, and we can probably do what you want to do, at least 26 to 27,000, if not maybe 28 to even 35,000 wouldn't be too insane. It is actually within the realm of possibility. It's just, it gets far less likely the higher up you want to shoot, right? And then on the other hand, if you want to have bullish divergence and you want to put in a macro low and you really want to, get a good macro low price, you want to fill in that CME gap, you want to test CZ's Binance scam wick, you want to test that kind of macro trend line, right? Then of course you're going to want to be tagging this type of area down here, which also does correspond to the support that our wicks have been putting in, and also to the highs of the markets in this little type of mid channel, and then also at the top here. And so that would be a very supportive area to drop down to. If we don't just cut it short, we also have this line right here, right? So let me make that a solid line. Let me make that one orange as well, just to maybe yellow there, just to show that it's also important. Like maybe this kind of COVID dump was just a little bit too deep. I don't know, right? I don't think so. I think it was going to happen anyway. You kind of have to do a quarterly backfill, right? It just maybe it wasn't going to be as rapid as it was. Maybe the world was very scared, but I think it was probably going to happen anyway, that we got some type of quarterly backfill. So you could consider that this is a reasonable range. The problem is that the virus distorted this area, and so we don't know exactly where we could align such a line like this, right? Maybe it's in the middle, maybe it's at the top, maybe it's at the bottom, okay? But we do have multiple confluences for this area. And then, we can also kind of suggest that there is some credibility to this area. And the reason why I have to keep this line here and be open-minded to the bottom being as high as this 17,000 here is just because, of course, you know, that would still fully comply with this type of price action, and it would also comply with a lower low that would give us that bullish divergence. And so it's just a very neat little area for us to tag if we do happen to drop down. Now, let's see. I think that probably I've touched on everything here in terms of just preparing you for perhaps another move down if we lose this teardrop, if we lose this channel especially, and then almost guaranteed if we lose this, this daily MACD here, that we could test the lows or even lower. Then what I'm going to be looking at is perhaps the stock market to give you an idea of why I think we could be getting a little bit toppy now on the stock market. You do see that the pre-market is opening a little bit low. That's not unusual, but it could signify that we are just getting into this type of resistant area on the charts. So let's take a look at the Dow Jones here. Dow Jones, we are getting into this area where we have like a lot of wicks. We have some of this pressure to the downside, you know, and we also had a big selling area over here, which just basically was a capitulation event right there. And so as we re-enter that capitulation event area, I mean, why should we expect anything different? I mean, should we expect that we're going to just easily pump through that? Well, we definitely have room for a little bit more of a run if we're using this type of diagonal limitation. But if we adjust this just modestly, right, and perhaps bring it down even like this to perhaps over here, then we could see that we are getting a bit toppy in this zone. And if I bring it down further, to correspond with some of these wicks and just ignore these kind of spikes, then perhaps, yeah, we could spike up that sort of thing. But look, we are actually very much where we should be getting rejected down on this diagonal. And so, you know, it's hard to say because obviously this is, a living being, right? These are human beings trading. And so we do have this kind of questionable zone and we could potentially push up here. But, do I think it's likely or not? I think it's more likely that we get a pullback in this area. And so if stocks are pulling back, crypto and Bitcoin is going to be pulling back. If we look at the SPY, same thing, right? The S&P 500, same thing. We're getting into this resistant area where we had that big sell-off. And so, of course, it would make sense for us to turn around in this area. Could we get a serious pullback and then just pop up even more? Yes, we could. But why should I expect that we're just going to push through this area? Like that was our sell-off area, you know, before they increased rates. So why would, we push through that? I don't know. I think that we could have a pullback and then try, but maybe some type of, I don't know if this counts. I guess this would be like a fifth wave. One, two, three. Yeah, a huge third wave, right? Four to the downside, and then maybe five, right? And top out up here. I mean, it could be possible, right? I'm just putting that in front of you that perhaps we're going to have a very serious pullback, and that could be pretty harsh on Bitcoin and crypto. And then also the same thing on the NASDAQ, right? So I don't really have to go over this. You guys can understand that basically we could consider this like one, two, a huge third wave, some type of smackdown here, and then maybe we try again, maybe get rejected with a double top, or maybe just push through a little bit, who knows. But anyway, that's going to be the fifth wave, right? Whether we get up here or get a double top, who cares, right? The whole point is, even from the Elliott wave theory, like we're going to be stretching this stuff a little bit strong, right? So we should perhaps see a pullback. And of course, as I mentioned, markets are opening up a little bit lower, suggesting that this week that pullback could come. Same thing on the Russell 2000. Now, the Russell 2000 is a little bit interesting to me because we have already essentially broken out of our trend on the Russell. Um, I'm not sure. I feel like I'm drawing this wrong or something. Like maybe I shouldn't consider the very top of the chart right there. And then we're like literally at resistance. But maybe, I'm just being overly, focused on this diagonal. And maybe the real issue is just if we're going to bump our head on this resistance or not, this kind of sell-off zone where we had that massive capitulation. And one of the reasons why this concept is really practical in some sense is because we did have these CME gaps, right? We had a whole bunch of CME gaps over here on these various charts, which I don't know if you've been paying attention, but they almost all had this capitulation candle to the downside where they just had multiple gaps, right? And multiple weaknesses in their candles, as they fell down. And so having basically retraced those areas. We had to build up a lot of momentum in order to do it, but having retraced to those areas, like we've now filled in those gaps, right? So with all these gaps filled, we're basically free to drop down again. You understand how that could work from just a practical data and just from a practical trading, but not really an investing, just kind of practical trading, not really investing perspective. And so that could be kind of a bull trap that just smashes us down, right? And now, are we above this diagonal right here? Yeah, we are. Look, we even checked back on it. And we're kind of breaking out of this one. So I don't know, are we going to put in a different structure? And is the Russell 2000 going to lead us the way? Well, the Russell 2000 got smacked down the hardest originally. So it wouldn't be surprising to me if the Russell 2000 actually led the way to some type of recovery by making a structure outside of these diagonals that was perhaps bullish um, in the long run, but not necessarily in the short run, right? Like maybe, of course, we're going to have pullbacks, but puts in some type of structure, which then the rest of the charts, start to mimic either when they push up or as they drop down, right? And so I'm just looking for that as a possible theory. But guys, I think I'm going to wrap it up there because that's essentially all that I can give you. We were having some discussion in the AR collective, and I had mentioned this previously at Alpha Commission regarding the ETH, right? The ETH CME chart. And of course, the ETH CME chart is doing very much the same thing. What the stock market is doing, it basically filled in these gaps that were formed when it had a huge capitulation, right, to the downside. And so it chopped its way up. And now it's found that resistant area. And guys, it's basically free to come back down again. It has another gap down here. So, the juicy bits are down here now. I mean, do these traders like really believe they're going to push ETH to 3,000, in this market? I mean, it is possible. So we're going to have to wait and find out. But you can see that there is some juicy bait down here. There is a CME gap right here looking to get filled. And so is this a target or is this a target? I don't know, We'll find out, and of course, the stocks are going to lead the way. Ethereum is, heavy driving the is heavy driving the crypto market, carrying on its back like a Matic and a bunch of those other things. But especially with the news that Ethereum has. But you can see there may be some limitation to this. And also, I would just point out that Ethereum also broke out of this lovely, lovely curve. And, what am I supposed to do? Anyone who criticizes me for using like, a curves instead of straight lines, I mean, what am I supposed to do with this, right? Like, that's garbage, right? This was an absolutely beautiful, right, concave curve here, which Ethereum on the CME chart perfectly corresponded to. And so, you know, ain't no shame in the game, sir. Like we used this and it was beautiful, and it had the breakout from it, and that was the indication that there was something going on with Ethereum, something interesting that was going on when it found support after having broke out from that effectively half year long, right? Half year long macro curve. And so, guys, curves are beautiful. And also, look at this. Look at this. Sorry, I've made some instructions for myself for how I'm just trading styles, but lining up with these lines over here. But look, I mean, look at these curves. It's just very interesting how ETH has conformed to these things. And while, you know, people may call this chart art or whatever, I'm telling you guys, like thinking out of the box doesn't hurt you. Okay, I got some feedback on this style of trading, and you know what? I appreciate the feedback, but in this case, I'm going to stick with my guns and trade in the way that works for me. But of course, we always appreciate hearing other people's styles and how they work. And if anyone has any tips on how I can improve, I would love to hear it. So feel free to leave a comment or whatnot. I'll try to increasingly get better and better. And of course, I'll laugh at some of the stupid stuff that I did, today or in the last half year. I'll just laugh at it. I'll find it so ridiculous, in 2 to 3 years, right, when I'm much more experienced. But until then, if you guys are growing along with me, awesome. So that's your alpha for the day. Stay safe and happy trading.